Good afternoon, traders. This is Tony D from the easyMarkets dealing room. An update today, another day, another chart that matters. We do have the dollar CNH now driving the markets, fresh lows for the year for the Chinese yuan, which means fresh highs on the dollar yuan chart. But we've got some key levels coming up there at the moment, which is 7.0. Is sort of line in the sand from back in 2011. 2016, that was the high that we got to. Have to get back there on the weekly. Before the intervention from the government, stabilization, and then the reversal all the way down to 6.2 with the US dollar weakness, US dollar strength are coming up. Now 6.92 is getting pretty close. It is driven by some of the weak data we've seen from China in the last couple of weeks. Now, in terms of is the Chinese government going to let it go past 7? Is this new sort of weakness in yuan going to prompt some comments from Trump? Those are the two big questions you have to play if you are playing on the short side of into the current market. With what's moving when dollar yuan goes up. Well, there's two big things that move in this scenario. One is gold, which has a very strong relationship, inverse relationship at the moment to that chart, and so we're going to fresh lows for the year. No surprise there when you've seen the yuan go up. And then you've got the Aussie dollar, which has also made fresh lows in the year. Basically, the slowdown in China is like the worst thing you can hear from the Australian side. It can bring some positive headlines if there's going to be an expansion of infrastructure and stimulus, but in the very short term anyway, it is more about the negative side when it comes to the Aussie dollar at the moment, and the market's definitely focused on the slowdown in China, not the recovery that the government's going to do yet. So we'll see if there's any big plans announced, but that could be longer term. And if you're talking about the short term, new lows and searching for support, have to go back on the weekly to find where these lows are. How far away are we from the support in the Aussie? Look, 71.50, 71.60. That's the lows from 2016. That we bounced off twice, so that could be the natural target here. 72 is a big figure, so there's that as well. But really, the underlying cause of this is the dollar yuan has to stop going up, dollar lira has to stop going up, and the market has to sort of focus a little bit or rebound a little bit on that US dollar strength, which also has to stop going up if you're trying to catch the bottom. Otherwise, Aussie dollar is going to continue to be falling with the euro, with the pound, with gold. So 7.0 on the dollar yuan is going to be a key level. We might test it either tomorrow or today if the market keeps moving as quickly. Most likely tomorrow, the next day, and then we see really where the Chinese government stands, and whether we get comments from Trump, like I said, is also really big in this. In terms of data, wage inflation from Australia was as expected, 0.6% quarter on quarter, and tonight we do have US retail sales and UK CPI. Now, UK CPI isn't as important anymore because they did do a rate hike, but it should still be showing a little bit of a tick higher given the recent massive depreciation in the pound. When you do have a depreciation as fast and as aggressive as the pound had in the last 2 months or so, with a little bit of a delay, you start to see inflation come through from all the imported prices going up. If we start to see that, then that could be supportive in the short term a little bit, but it's not like back in the day where it's a rate hike is going to be made or broken on that CPI number. The next rate hike from the UK is going to be most likely in 2019 sometime, and contingent on there being a Brexit deal. Still no Brexit deal, and the market's making new lows under 127 at the moment. A little bit oversold positionally and on the chart technically, but you've seen the willingness or the sort of fear in the pound continue to increase every day that you don't have a deal. More and more chatter about preparing for a no deal, more and more concern from business regarding a no deal outcome, and from politicians both in the UK and in Europe warning of the dangers of a no deal. It seems like everyone's aware of the issue, but it doesn't seem like there's been too much progress made, most likely because it's been a holiday in the UK for politics. Do come back into play very soon, so we should start to see some sort of headline risk, positive headline risk rather than negative headline risk, given where the market is at, if there is any progress made at all. Now, in terms of the euro as well, so the euro, the other big one, has broken fresh lows today. Hasn't really been as weak as some of the other pairs though. It's not the go-to. It is weak, just generally bowing to US dollar strength, but it hasn't been as in the firing line as directly. Now Trump has already talked about the euro weakness when the euro was 115, and the ECB sort of manipulating their currencies. Definitely getting probably on his radar again with the dollar yuan higher and the euro now towards 113. Basically, this US dollar strength is going to make it harder for the Trump manufacturing plan in the US to get off the ground, because the US dollar is going to be too strong, too expensive for others to buy the US exports. So we'll see exactly if what the number is when it gets to the line. It really probably has to be like the main theme in the market talking about it. Then I doubt that he won't. I have no doubt that he won't disappoint in terms of talking about it at some point, especially if it continues to get worse. Let's see though in the coming day. In the moment we're in the middle of the storm and we're seeing exactly how far these pairs are going to fall in the short term. Definitely a little bit of fear. If you look at talking about stock markets, they've taken it with a little bit of haven't been dramatic moves, definitely negative, but haven't been dramatic moves so far. US futures down about 80 points or so. Alright, we'll be back tomorrow with the next update. A very interesting week and a big week here in the markets. If you have any questions about some of the crosses, because we didn't get too much time here to talk on the crosses today, give us a call on the contact numbers below. If you're not a member of the Easy Markets dealing room, you can sign up with the link below.